What's going on? Welcome back to the channel. So today we're going to talk to you about Moderna. They recently did drop their earnings. I'm going to go over some of the absolute key highlights from those earnings that you need to take away. Aside from that, support and resistance points and what analysts are saying. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So at the time of doing this video, it is up 35.43%. On Friday, it did go up 3.35%, encumbering their earnings. And ultimately, kind of on the timid side, so the implied volatility was 8.58%. So definitely on the low end for that, and somewhat mixed kind of results leading into their earnings. So not necessarily the best overall, but looking at this right here, so they did miss on earnings per share. They did beat on revenue by 24.86 million. I'm going to go over the future guidance near the end of the video, but aside from that, nothing too crazy. Looking at shorts though, they were returning leading into the earnings, meaning they did feel that there was a good chance that they were going to beat, and you can kind of see that right here. It went from roughly 12.54% to in the 11s. Obviously Moderna is not a squeeze play or anything like that, but 11.35% of the free float is being shorted. Works out to be 39.45 million shares overall are being shorted today, which is on February the 18th. Shorts are increasing 201,000 shares. But again, it's not a squeeze play or anything like that. Of the call options that are being purchased, you do see a consensus for it to be roughly around that, looks like $43 to $45 range. So a fairly nice continuation move higher. Bears on the flip side, they are anticipating for it to be sub between that $30 to $33. So a lot more upside is anticipated. Right now with it at 35 and change, it is trading between this pivot and this S1. So 33.61 will be a strong support. Just take note of that, followed by 29.60. Flip side, $40.09, and then 46 and change is going to be the next strong target / resistance points. So I think in general, it has been bouncing off this S1, really showing some good foundation, wanting to move higher, so just take note of that. Aside from all that fun stuff though, quickly popping over here, looking at some of the recent analyst ratings. So last one, there was two that came out today, 39 and then 45. The 45 was a downgrade from Barclays, who the analyst has a 40% success rating, but you have 32, you have 51, $25. That is the new low for Moderna. So $25 sell. That was by Wolf Alexandria, who has a 41% success rating. So as a consensus, $46.43, which does represent a 31.2% upside. So not all that crazy. So you have kind of polar opposites, no new highs. So you did have a $96 one that was done last month. UBS analyst, which has a ultimately right over here, 37% success rating. So not all that great, but let me know your thoughts on Moderna. Do you own it, sell it? What have you been doing with it? One final thing, just take advantage of this. So if you want all this information, so ownership, analyst ratings, forecast, everything under the sun, take a look at IBKR in the description below and also the comments for all of it to be completely free. So recommend you all signing up for that because yeah, very advantageous. But with all that said, let's get to the future guidance.
Moderna outlines 1.5B minus 2.5 billion 2025 revenue target with focus on 10 product approvals. Earnings call insights Moderna, mRNA, Q4 2024, management view. Moderna CEO 𝗖𝗢𝗡𝗡𝗘𝗖𝗧 highlighted 2024 as a year of significant progress, with revenues reaching $3.2 billion. The company reduced operating expenses by $2.6 billion and ended the year with $9.5 billion in cash and investments. The company announced prioritization of 10 high-value programs with potential approvals over the next 3 years, aimed at diversifying sales beyond COVID-related products. These include respiratory vaccines, latent virus vaccines, rare disease treatments, and oncology programs. 2 commercial products, Spikevax and MRNA, were launched, with MRNA generating $25 million in sales for the year. Management emphasized its long-term outlook for RSV vaccines, particularly in international markets. CFO 𝗖𝗢𝗡𝗡𝗘𝗖𝗧 stated, total revenue for the fourth quarter was $966 million, impacted by lower vaccination rates, market share reductions, and increased competition. He also mentioned that the company is targeting a $5.5 billion cash cost in 2025, a $1 billion reduction from 2024 projections. President 𝗖𝗢𝗡𝗡𝗘𝗖𝗧 noted progress in pivotal studies for respiratory and non-respiratory vaccines. He shared updates on approvals filed for next-gen COVID, RSV, and flu COVID combination vaccines, with PDUFA dates set for mid-2025. Outlook. The company projects 2025 revenue within $1.5 billion to $2.5 billion, influenced by uncertainties in vaccination rates, competition, and RSV market dynamics. Guidance includes $5.5 billion in cash costs for 2025, with further reductions anticipated in 2026. Management reiterated its aim for up to 10 product approvals by 2027, targeting a combined market opportunity exceeding $30 billion. Financial results. Adjusted EPS for Q4 2024 was reported as $2.91, compared to analysts' estimates of $2.733. Revenue for Q4 stood at $966 million versus an estimate of $941.1 million. Full-year revenue of $3.2 billion marked a 53% decline from 2023, attributed to reduced vaccination rates and waning COVID demand. Net loss for the quarter was $1.1 billion, impacted by inventory write-downs and contract termination charges. Cost reductions in R&D and SG&A expenses were achieved, with R&D spending down 20% year-over-year in Q4 Q&A. 𝗖𝗢𝗡𝗡𝗘𝗖𝗧, UBS asked about R&D flexibility and clinical hold details for the norovirus program. CFO Mock noted $4.1 billion in R&D expenses for 2025 and highlighted flexibility for reductions in 2026. 𝗖𝗢𝗡𝗙𝗧 explained that the clinical hold was precautionary, linked to a single Guillain-Barré syndrome case with no impact on trial timelines. Gina Wang, Barclays inquired about the CMV trial timeline and norovirus study hold removal. Hoag confirmed CMV results are expected in 2025 and noted that the norovirus hold depends on FDA review, with no anticipated impact on trial conduct. Tyler Van Buren, TD Cowen, asked about RSV market share potential. Management emphasized a stronger competitive position in 2025 with expanded labeling and international sales. Sentiment analysis. Analysts expressed skepticism on RSV's growth potential and flagged concerns over market competition and vaccine uptake. Questions repeatedly focused on timelines and market share. Management displayed a mix of confidence and caution. Specific phrases like, "We remain confident" and "We are committed" reflected assurance on long-term growth. Defensive responses included, "We are monitoring closely," and "It's too early to call." Compared to Q3, management's tone remained cautious amid ongoing market challenges, while analysts maintained a more pressing tone on uncertainties. Quarter-over-quarter comparison. Revenue declined from $1.9 billion in Q3 to $966 million in Q4, largely due to lower COVID vaccination demand and reduced international sales. Guidance language shifted to emphasize cost discipline and diversification through non-COVID products, a departure from Q3's focus on near-term respiratory vaccine performance. Analyst focus evolved from market share questions in Q3 to broader concerns on product pipeline execution and regulatory hurdles in Q4. Risks and concerns. Lower vaccination rates and increased competition in COVID and RSV markets were highlighted as headwinds. Analysts raised concerns about clinical holds, particularly for norovirus, and regulatory uncertainties impacting product approvals. Inventory write-downs and manufacturing capacity challenges were flagged as recurring issues. Final takeaway. Moderna's Q4 2024 earnings call highlighted its ongoing challenges in the respiratory vaccine market and its strategic pivot towards a diversified product portfolio. The company's focus on 10 high-value programs for potential approval by 2027 underscores its long-term growth ambitions, while cost reductions and a cash cost target of $5.5 billion in 2025 demonstrate financial discipline. Despite near-term competitive pressures and regulatory uncertainties, management remains cautiously optimistic about its pipeline's potential to drive future revenue growth.